Hello and welcome to all our viewers on CFO Insights. I am Shelly, a financial technology consultant at Hyperbots, and I'm very excited to have Shaun Walker here with me, who is a seasoned internal audit leader with a wealth of experience in driving risk management, compliance, and governance initiatives across diverse industries. Thank you so much for joining us today, Shaun. Let's dive right into our discussion on structuring asset heads in the chart of accounts. My first question to you is, can you explain why structuring asset heads correctly in the chart of accounts is critical for a company's financial management?
Sure. So I'd say the main things is that first, it impacts directly financial reporting, which impacts decision making and regulatory compliance. So decision making just related to asset utilization, depreciation, investment needs, things of that nature. And also, as I mentioned, compliance with accounting standards as well.
And how do asset structures in the chart of accounts vary across different industries? And why is this variation important?
Yeah, so for example, if it's like a manufacturing company, then there'll be a lot of fixed assets. Or if it's a SaaS company, software as a service company, there'll be more intellectual property and software. So you have to differentiate between those two.
To talk about some of the proven methods, what are some best practices for structuring asset heads in the chart of accounts?
So the main things I would say is categorizing it by liquidity and usage, maintaining consistency, just ensuring that asset heads are consistently applied across periods, just to help with trend analysis as well as comparability, and also a detailed sub-categorization. That'll help better track depreciation, impairments, and utilization. And definitely from an audit perspective, doing regular reviews. So doing a periodic review to update the chart of account to reflect any changes for acquisitions, disposals, or shifts in accounting standards. And then lastly, I would say just aligning the asset structure with industry standards, just making sure that there's relevance and also compliance as well.
Drawing from your experience, can you tell us some common mistakes you have seen accountants make when structuring asset heads in the chart of accounts?
Sure. So one thing would be, misclassifying it or improper classification. So, for example, placing something that's a long-term asset into a current asset. Another mistake would be lack of granularity. So grouping all assets under one broad category versus making it more specific. And also failure to making updates, doing an incorrect valuation. So incorrectly valuing assets, especially intangibles like goodwill, that can affect financial outcomes. And then if they're categorized inconsistently, that can also create discrepancies and reduce the reliability of the data.
And as AI reshapes the future of finance, I have to ask, how can AI help improve the management of asset structures in the chart of accounts?
Absolutely. So at the end of the day, AI really helps with automating processes, which saves time. And so AI can analyze data and automatically categorize the assets based on characteristics, usage, and it reduces manual human error. Also, doing a valuation of intangibles, and also AI can continuously monitor. So they can track changes in asset values, provide real-time updates, and ensure accuracy. Another thing would be anomaly detection. So they can detect anomalies in asset management. So if there's a sudden change in values or an unexpected disposal, they can analyze these historical patterns. And lastly, I would say they can analyze usage patterns and recommend asset allocation or disposal strategies to maximize the effectiveness and efficiency.
From what you have observed in your years in the industry, can you give us an example of how a specific industry could benefit from AI in managing asset heads in the chart of accounts?
Sure. So I've worked with a lot of healthcare companies. So in the healthcare industry, oftentimes healthcare providers deal with varying arrays of fixed assets. So you got medical equipment as well as intangible assets like patient databases. And so what AI can do is optimize the categorization of these. So it leads to more accurate financial statements, better asset management, optimized utilization, and ultimately improves financial decision making.
What role does regular review and updating of asset heads play in maintaining an effective chart of accounts? And how can AI assist in this process?
Yeah, this is huge, especially from an audit perspective and risk advisory. Doing a regular review ensures that the chart of account remains accurate. It reflects accurately the current asset status and values. This includes acquisitions, disposals, depreciation, changes in market value. And then the way that AI can assist is just, as I mentioned earlier, continuously monitoring asset data, identifying discrepancies, outdated entries, and making suggestions for updates.
What advice would you give to companies or our viewers looking to implement AI solutions for managing their asset structures in the chart of accounts?
So the first thing is understanding the challenges. So we need to understand how, current asset management is challenged, identify areas where AI can add the most value. The main things, as I mentioned before, would be classification, valuation, and anomaly detection. So those are crucial for maintaining efficiency, data quality, and it's important to regularly assess how AI can help the processes of the company. With business needs constantly evolving, AI is able to evolve with the business needs as well.
Thank you so much, Shaun, for these valuable insights on managing asset structures in the chart of accounts. This discussion will certainly help many companies optimize their financial management practices using AI.
Absolutely. Glad to be here. Thanks for inviting me. I enjoyed sharing my expertise as well. Thank you.